Hey everyone, welcome back. Today, we're going to be taking a look at Apple's fiscal year 2023. It ended September 30th. We've got a couple of key documents, Apple's 10K report for the 2023 fiscal year and their Q4 statement for the same period. So let's dive in. First up, let's unpack Apple's product lineup. The 10K report reads like a tech lover's dream list. We've got the iPhone 15 series, the Pro, the Plus, the regular, and of course the Pro Max. Then there's the Mac family, MacBook Air and Pro for those of us on the go, and iMac, Mac Mini, Mac Studio, and the mighty Mac Pro for serious power users. And for all you tablet fans, Apple's got you covered with the iPad Pro, iPad Air, the classic iPad, and the iPad Mini. Of course, no Apple experience is complete without the wearables. We're talking Apple Watch Series 9, Apple Watch Ultra 2, and Apple Watch SE for all the fitness and tech enthusiasts out there. For the audiophiles, there's the AirPods, AirPods Pro, AirPods Max, and Beats products. And for the home, we have Apple TV 4K for streaming and gaming, and the HomePod and HomePod Mini for amazing sound. And don't forget all the accessories, Apple-branded and third-party products that round out their impressive portfolio. But here's where things get really interesting. The 10K report reveals a subtle shift in Apple's strategy. While they're still all about those shiny new gadgets, their services are becoming a bigger piece of the puzzle. Think about it. Apple Music, Apple TV plus EV, Apple Fitness plus cell phone, Apple Arcade, Apple News plus Sate, and Apple Care. These subscriptions aren't just bringing in a steady stream of cash, they're also locking users deeper into that Apple world. Now, let's talk competition. Apple doesn't shy away from acknowledging the fight they're in, especially from companies that are all about low prices, and sometimes even trying to copy their iconic designs. In fact, the 10K report states that many of the company's competitors seek to compete primarily through aggressive pricing and very low-cost structures, and by imitating the company's products and infringing on its intellectual property. Clearly, Apple knows they need to keep innovating and protect what's theirs to stay ahead of the game. And even Apple feels the heat from the global economy. They're straight up saying that inflation and uncertainty are putting a strain on their suppliers and the whole operation. The report even points out the risks of having most of their manufacturing in Asia. Think natural disasters or trade wars. Those things can really throw a wrench in the works. But here's something you might not have thought about. Apple heavily relies on those third-party app developers. Your iPhone wouldn't be nearly as cool without all those amazing apps, right? But managing this app ecosystem isn't a walk in the park. The 10K reveals that Apple is juggling the task of keeping these developers happy while fending off competition from other platforms, like Android. And let's not forget the ongoing scrutiny and legal battles surrounding the App Store. Remember the EU Digital Markets Act? Well, Apple has to comply with it by March 2024, and that could significantly impact their App Store revenue. One of the biggest changes. They might have to allow alternative app stores on their devices, which could eat into their commission from app sales. It's a tightrope walk for Apple, maintaining control while adapting to regulations and what users want. Now let's get to the good stuff, the financials.
We'll be looking at the 10K and the Q4 statement side by side to spot any trends. Apple's total net sales for fiscal year 2023 were $383,285 million, which is a bit lower than the $394,328 million from 2022. Now, before you think that's bad news, let's break it down. Product sales did dip $298,085 million in 2023 compared to $316,199 million in 2022. But here's the twist. Service sales kept climbing, hitting $85,200 million in 2023 compared to $78,129 million the year before. What does this tell us? It confirms that Apple is strategically shifting towards those recurring revenue streams, those subscriptions we talked about. They're not just a hardware company anymore, and this move could be crucial for the future. Next up, gross margin, a measure of a company's pricing power and efficiency. In 2023, Apple's gross margin was $169,148 million, while in 2022, it was $170,782 million. Another slight dip, but remember, this is happening during a time of global economic uncertainty. The 10K emphasizes that gross margin can be volatile, affected by component costs, the mix of products they sell, and even currency exchange rates. But one thing remains clear. Apple's all in on research and development.
In 2023, they spent a whopping $29,915 million on R&D, a 14% jump from the previous year. This tells us they're serious about staying ahead of the innovation curve and delivering those game-changing products that Apple is famous for. It also hints at their long-term vision to keep wowing us with new and exciting tech. And for all you investors out there, let's break down Apple's approach to shareholder value and capital return. Apple is known for taking care of its shareholders, and their 10K and Q4 statement confirmed this. They've got a massive share repurchase program, and they just increased their quarterly dividend from $23 to $1.24 per share. In 2023 alone, Apple repurchased a mind-blowing $76.6 billion of its own stock and paid out $15.0 billion in dividends. That's serious cash flowing back to investors. This level of capital return shows just how financially strong Apple is and how dedicated they are to rewarding those who believe in their success. It's a clear sign that they're confident in the long-term value of their company, even with all the market ups and downs. But there's more to the story. The 10-K reveals that a big chunk of their manufacturing purchase obligations, a cool $53.1 billion as of September 30, 2023, is due within the next 12 months. This tells us Apple is investing heavily in their future production, even with all the economic question marks out there. They're clearly not letting current headwinds stop them from building for what's next. Now let's zoom in on another key piece of Apple's financial picture, their investment portfolio. As of September 30, 2023, their consolidated balance sheets show marketable securities valued at $31.590 billion and cash equivalents at $29.965 billion. To really understand how these investments are doing, we need to look closer. The notes to the consolidated financial statements provide a detailed analysis of their marketable debt securities. A big chunk of these investments is classified as Level 2 assets, meaning their fair value is determined using models based on observable market data. Examples include U.S. Treasury securities, U.S. agency securities, non-U.S. government securities, corporate debt securities, and even mortgage and asset-backed securities. This strategy of spreading their investments across different asset classes is a classic way to manage risk and potentially boost returns. But it's not all smooth sailing. The 10-K points out potential risks linked to these investments. Think changes in how easy it is to buy or sell them. That's liquidity, credit deterioration, interest rate swings, and even political turmoil. All things that can affect returns. It's a reminder that even giants like Apple aren't immune to the roller coaster ride of the global financial markets. Now let's talk about a topic that's getting more and more attention: cybersecurity. Apple's 10-K doesn't sugarcoat the threats they face. They acknowledge that their operations and global supply chain are vulnerable to things like IT system failures and network disruptions. Think natural disasters, accidents, power outages, telecom failures, cyber attacks, even acts of terrorism or war. The report specifically mentions ransomware, which is a growing concern for everyone these days. Remember those industrial accidents at some of Apple's suppliers we talked about earlier? Those could also disrupt Apple's operations and delay those shiny new product launches. It's clear that Apple is very aware of how cybersecurity threats are constantly changing and the impact those threats could have on their business, reputation, and bottom line. They even say their insurance might not cover all the losses from a major cyber incident. It's a sobering reminder that even the most sophisticated companies are in a constant battle to stay ahead of those cyber criminals. Now let's shift gears and talk about a vital part of Apple's financial well-being, their debt. Their 10-K has a detailed section on their debt obligations, which consists of commercial paper and term debt. Commercial paper is essentially short-term, unsecured debt, and as of September 30, 2023, Apple had $6.0 billion of it outstanding, compared to $10.0 billion a year earlier. This suggests they've been reducing their reliance on this kind of short-term borrowing, which is generally a good sign for financial stability. Then there's term debt, which refers to longer-term borrowings. Apple's 10-K has a table listing all their outstanding notes as of September 30, 2023. It's a pretty extensive list. They've issued debt with maturities ranging from 2024 to 2062. This staggered approach helps them manage their debt burden over time so they don't have to face a giant repayment all at once. The 10-K also gets into the nitty-gritty details of these notes, including interest rates, options to pay them back early, and even scenarios where they might have to redeem the notes ahead of schedule due to tax law changes. For those curious about Apple's global reach, the 10-K provides a fascinating look into their operations across different geographic segments: the Americas, Europe, Greater China, Japan, and the rest of Asia-Pacific. Each segment is treated as a separate reporting unit, reflecting their unique market dynamics and customer bases. The 10-K reveals that Apple evaluates each segment's performance based on net sales and operating income, showing their focus on profitability and growth in each region. We also learned that the proportion of net sales by revenue source, meaning products versus services, was generally consistent across all segments, except for Greater China. In Greater China, iPhone revenue represented a moderately higher proportion of net sales. This suggests that while their services are growing globally, hardware, particularly the iPhone, still plays a dominant role in certain markets. It's a reminder of the nuances of running a global business and the need to adapt strategies based on local market conditions and what consumers in each region prefer. Now let's switch gears and talk about something that might sound a little dry: accounting estimates. You might be thinking, wait, accounting estimates sounds boring, but trust me, they play a crucial role in how a company paints its financial picture. Apple's 10K has a section dedicated to critical accounting estimates, acknowledging that judgment calls are involved when preparing financial statements. These estimates touch upon various aspects of their business, from how they recognize revenue to how they value assets and liabilities. For instance, Apple discusses the complexities of estimating future product returns, which can impact their revenue recognition. They also highlight the challenges of valuing intangible assets like goodwill and intellectual property, emphasizing the inherent uncertainties involved in these estimations. The 10K also dives into how they account for legal and other contingencies, such as potential lawsuits or regulatory actions. In these cases, Apple has to make judgment calls about the likelihood of adverse outcomes and the potential financial impact. It's a reminder that financial statements aren't always clear-cut. They involve subjective judgments based on the best available information at the time. And understanding these estimates can give you a deeper understanding of a company's financial health, potential risks, and opportunities they face. Now let's talk regulation, a hot topic in the tech world. Apple's 10K acknowledges the growing scrutiny they're under from governments and regulators globally. They specifically mention antitrust investigations, privacy concerns, data security regulations, and even laws aiming to regulate App Store practices. One example is the EU Digital Markets Act, which we touched on earlier. This could force Apple to open up its devices to other app stores and payment methods, potentially impacting their App Store revenue. They also mention concerns over data localization laws, which require certain data to be stored within specific geographic regions, adding another layer of complexity to their global operations. It's clear that Apple is navigating a complex regulatory maze, and these regulations could reshape their future business model. Next up, let's look at Apple's exposure to foreign currencies. Remember, they're a global company with operations all over the world, and those currency exchange rate swings can impact their bottom line. Their 10K acknowledges that a weaker foreign currency compared to the US dollar can negatively impact the dollar value of their international sales and earnings. To manage this risk, Apple uses derivative instruments like foreign currency, forward, and option contracts. These financial tools allow them to lock in exchange rates for future transactions, reducing the uncertainty that comes with currency fluctuations. However, the 10K also warns that these hedging activities might not always fully offset the negative effects of currency movements. It's a reminder that managing foreign currency risk is an ongoing challenge for global companies. And even sophisticated hedging strategies can't eliminate all the uncertainty. Now let's talk about accounts receivable, the money owed to Apple by its customers for products or services they've already received. The 10K highlights that most of Apple's outstanding trade receivables aren't backed by collateral, credit insurance, or third-party guarantees. This means Apple is taking on a certain level of credit risk, hoping that customers will pay their bills on time. They also mention that a significant portion of their trade receivables is concentrated with cellular network carriers and other resellers. This concentration adds another layer of risk because any financial difficulties faced by these key customers could affect Apple's ability to collect its receivables. That being said, Apple's 10K states they have procedures in place to monitor and mitigate this credit risk, such as requiring credit support or collateral from certain customers. It's a delicate balancing act for a company like Apple, extending credit to drive sales while also managing the risk of potential bad debts. Let's revisit Apple's capital return program. We've already discussed how they're known for being generous with their shareholders, returning capital through dividends and share buybacks. Their 10K reiterates their commitment to this program, stating they intend to increase their dividend annually, subject to approval by their board of directors. They also highlight their substantial share repurchase program, which lets them buy back their own stock. This has the potential to boost earnings per share and return value to investors. However, there are some cautionary notes in the 10K. They acknowledge that future dividends depend on the board of directors' decisions, and there's no guarantee that dividends will continue at current levels or increase. They also point out that the share repurchase program doesn't obligate them to buy any specific number of shares. This means that while Apple has a history of returning capital to shareholders, the exact amount and timing can vary based on their financial performance, market conditions, and other factors. Now let's dive into intellectual property, a hot topic in the tech world. Apple's 10K stresses how important intellectual property is to their success. They state they hold a huge number of patents, trademarks, and copyrights, and are constantly filing for more. They also acknowledge the challenges of protecting their intellectual property globally, where enforcement varies across different jurisdictions. The 10K specifically mentions that some competitors try to copy Apple's products and infringe on their intellectual property, often by focusing on low prices instead of genuine innovation. This highlights the ongoing battle Apple faces in protecting its designs and innovations, especially in the fast-paced tech world where imitation and competition are fierce. It's clear that Apple sees intellectual property as a key asset and a source of competitive advantage, and they're actively defending their rights to protect their market position and future growth. Speaking of innovation, Apple's 10K highlights their significant investments in research and development. They state that their ability to compete successfully depends heavily on their ability to bring innovative new products, services, and technologies to the market. They acknowledge that the tech industry is all about rapid technological advances, and staying ahead of the curve requires constant investment in R&D. Their consolidated statements of operations show that their R&D expenses have been steadily increasing over the past few years, reaching $29,915 million in 2023. This level of investment shows Apple's dedication to innovation and their belief that R&D is key to their long-term success. It also gives us a peek into their future product pipeline, suggesting they're actively developing new technologies and innovations that can shape the future of the tech industry. Now let's shift gears and talk about supply chain risks. Apple's 10K dedicates a whole section to this, acknowledging that their business is vulnerable to disruptions in their global supply chain. They point out several potential sources of disruption: natural disasters, political instability, trade restrictions, and even pandemics like the COVID-19 pandemic, which had a major impact on global supply chains. Apple also points out that their reliance on single or limited sources for certain components makes them especially susceptible to supply chain disruptions. If a key supplier runs into trouble, it could affect Apple's ability to manufacture and ship products on time. The 10K also mentions risks linked to labor disputes, public health issues, and even climate change, all of which can impact their suppliers and disrupt operations. It's clear that Apple is acutely aware of the vulnerabilities in their supply chain and the potential consequences of disruptions. They're actively working to mitigate these risks through diversification, strategic partnerships, and contingency planning. But the complexities of global supply chains mean that disruptions are always a possibility. Let's talk about Apple's retail stores. Apple's 10K mentions their retail and online stores as key distribution channels, allowing them to connect directly with customers and control the brand experience. They highlight the importance of their retail staff, who are trained to provide expert advice and support, further enhancing the customer experience. However, Apple's 10K also acknowledges the challenges of running retail stores in a changing retail landscape. They mention the rising costs of operating physical stores, increasing competition from online retailers, and the need to adapt to evolving consumer preferences. It's clear that Apple is constantly reevaluating their retail strategy, balancing the benefits of physical stores with the growth of online channels and the shifting dynamics of the retail industry. Now let's talk about environmental, social, and governance, ESG factors, an increasingly important topic for investors. Apple's 10K dedicates a section to their commitment to sustainability, highlighting their efforts to lessen their environmental impact, promote diversity and inclusion, and uphold ethical business practices. They discuss their initiatives to use renewable energy, reduce waste, and design products that are more energy efficient and recyclable. They also highlight their efforts to create a more inclusive and diverse workplace, promote supplier responsibility, and advocate for human rights. This focus on ESG reflects the growing awareness among investors and stakeholders about the importance of these factors for long-term sustainability and corporate responsibility. It's clear that Apple is taking these issues seriously and integrating them into their business strategy. Now let's talk about data privacy, an issue that's been in the headlines a lot. Apple's 10K acknowledges the increasing scrutiny of data privacy practices and the growing demand for greater transparency and control over personal data. They emphasize their commitment to protecting user privacy, stating that they design their products and services with privacy in mind. They also mention the various laws and regulations they comply with, such as the General Data Protection Regulation, GDPR in Europe, and the California Consumer Privacy Act, CCPA. They discuss the steps they take to secure user data, give users choices about their data, and be transparent about their data collection and use practices. It's clear that Apple recognizes the importance of data privacy and is taking steps to build trust with users and comply with evolving regulations. However, they also acknowledge the ongoing challenges of balancing privacy with the functionality of their products and services in a data-driven world. Now let's move on to corporate governance, a crucial aspect of any public company. Apple's 10K includes a section on corporate governance, outlining their policies and practices for ensuring accountability, transparency, and ethical conduct. They discuss their board of directors, their committees, their executive compensation program, and their code of conduct. They also highlight their commitment to shareholder engagement, providing shareholders with opportunities to voice their opinions and vote on important matters. This focus on corporate governance reflects Apple's efforts to maintain high standards of ethical conduct, transparency, and accountability to the shareholders and stakeholders. It's a crucial aspect of building trust and ensuring the long-term sustainability of their business. Now let's talk about risk factors, something that's always on the minds of investors. Apple's 10K dedicates a significant portion to discussing various risk factors that could potentially impact their business, financial condition, and stock price. They categorize these risks into several areas, including economic risks, competitive risks, legal and regulatory risks, operational risks, and strategic risks. For example, they discuss the potential impact of economic downturns, geopolitical instability, changes in consumer preferences, and even natural disasters. They also highlight the risks associated with competition from other tech giants, intellectual property infringement, cybersecurity threats, and supply chain disruptions. They discuss the potential impact of adverse legal judgments, regulatory changes, product defects, and even reputational damage. It's a sobering reminder that even a company as successful as Apple faces a wide range of potential challenges and uncertainties. By transparently outlining these risks, Apple aims to provide investors with a comprehensive understanding of the potential factors that could impact their investment decisions. Now let's talk about uncertainties, which are closely tied to risk factors. Apple's 10K acknowledges that their business operates in a complex and dynamic environment, and there are inherent uncertainties that can impact their financial performance and future prospects. They discuss the challenges of forecasting future sales, estimating product returns, valuing assets and liabilities, assessing the impact of future events. They also highlight the uncertainties associated with global economic conditions, technological advancements, consumer behavior, and even government policies and regulations. These uncertainties can make it difficult to predict future financial performance with absolute certainty, and investors should consider these uncertainties when making investment decisions. By acknowledging these uncertainties, Apple aims to provide investors with a realistic view of the challenges and opportunities they face in a constantly evolving marketplace. Let's look at a specific example of uncertainty that Apple highlights in their 10K, the outcome of legal proceedings. Apple is involved in various legal proceedings and claims that come up in the normal course of business, and the outcomes of these proceedings can be uncertain. The 10K specifically mentions the lawsuit filed by Epic Games, a major game developer, alleging antitrust violations related to Apple's App Store practices. The outcome of this lawsuit could significantly impact Apple's App Store business model, their revenue, and even their reputation. They also mention other ongoing legal proceedings related to intellectual property disputes, patent infringement claims, and even tax matters. These legal proceedings can be costly and time-consuming, and the outcomes can be unpredictable. By highlighting these legal uncertainties, Apple aims to inform investors about the potential risks associated with ongoing legal battles and the potential impact those battles could have on their business. Now let's talk about financial reporting, an essential element for any public company. Apple's 10K includes their audited financial statements, which provide a complete overview of their financial performance for the fiscal year. These financial statements include the consolidated statements of operations, the consolidated balance sheets, the consolidated statements of cash flows, and the consolidated statements of shareholders' equity. They also include extensive notes to the financial statements, which provide detailed explanations of their accounting policies, significant accounting estimates, and other relevant information. These financial statements and notes are audited by an independent registered public accounting firm, giving investors assurance about the reliability and accuracy of the information presented. Let's turn our attention to the report of the independent registered public accounting firm. Apple's 10K includes the audit report from Ernst Young, LLP, their independent auditor. The audit report expresses an unqualified opinion on Apple's financial statements, meaning that the auditors believe the financial statements are presented fairly in all material respects, in accordance with generally accepted accounting principles, GAAP. This unqualified opinion gives investors comfort about the reliability of the financial information presented. The audit report also discusses a critical audit matter, which is an issue the auditors found particularly challenging, subjective, or complex during their audit. In Apple's case, the critical audit matter relates to their uncertain tax positions, which involves significant judgment in interpreting and applying complex tax laws. The auditors discussed their procedures for evaluating Apple's assessment of these tax positions, providing transparency into their audit process and the areas they focused on. Now let's turn to a section that offers even more insights into how Apple manages its finances, management's discussion and analysis or MD&A. Apple's 10K includes the MD&A, which is like a behind-the-scenes explanation for the management team themselves. They break down their financial results, highlight key performance indicators, and discuss the factors that influence their performance. The MD&A goes beyond just the numbers in the financial statements, giving investors a deeper understanding of what's really driving Apple's business. For instance, they might talk about the impact of new product launches, how consumer demand is shifting, their pricing strategies, or even the overall macroeconomic environment. They might also address the challenges and opportunities the company is facing, like competition, regulatory changes, or technological advancements. By reading the MD&A, investors can gain a much richer understanding of Apple's business strategy, what's driving their performance, and the factors shaping their financial future. Next up is a section that focuses on the people at the helm of Apple. Information about directors, executive officers, and corporate governance. Apple's 10K has a section dedicated to their board of directors, executive officers, and corporate governance practices. This section typically includes information about the directors' and officers' backgrounds, their experience, and qualifications. It also covers the different committees of the board and their responsibilities. You'll find information about the company's executive compensation program, their code of conduct, and their policies on shareholder engagement. This is all valuable information for investors because it helps you understand the leadership structure of the company, the experience and qualifications of those leading the company, and the governance practices they have in place to ensure accountability and transparency. Now let's talk about something that's always of interest to shareholders: dividend policy. Apple's 10K includes information about their dividend policy, which outlines their approach to paying dividends to shareholders. As we discussed earlier, Apple has a history of paying dividends and has indicated their intention to increase their dividend annually, subject to approval by their board of directors. The 10K might provide details about their past dividend payments, their current dividend rate, and the factors they consider when determining their dividend policy. It might also discuss the company's approach to share buybacks, which can also be a way to return value to shareholders. This information is valuable for investors because it helps you understand Apple's commitment to returning capital to shareholders and the factors they consider when making those dividend decisions. Now, let's discuss a topic that's often overlooked but can be quite insightful: related party transactions. Apple's 10K includes a section that discloses any significant transactions they've had with related parties. This could be transactions with their directors, executive officers, or major shareholders. These transactions might involve things like loans, leases, or even sales of goods or services. The purpose of disclosing these transactions is all about transparency and addressing any potential conflicts of interest that might arise. Investors can review these disclosures to assess whether any related party transactions raise concerns about fairness or potential self-dealing. Transparency in these matters is key for maintaining trust and accountability with shareholders. Let's move on to a topic that can give us a glimpse into a company's long-term strategy: acquisitions and divestitures. Apple's 10K might include a section that discusses any significant acquisitions or divestitures they've made during the fiscal year. Acquisitions involve buying other companies or assets, while divestitures involve selling off parts of their business. These strategic moves can significantly reshape a company's portfolio, allow them to expand into new markets, or even help them shed underperforming assets. By disclosing these acquisitions and divestitures, Apple gives investors a peek into their long-term strategy and how they're positioning themselves for future growth. Now let's dive into a topic that's particularly relevant in the fast-paced world of tech: competition. Apple's 10K has a section dedicated to discussing the competitive landscape they operate in. It highlights the major players they compete with and the factors that drive competition in their industry. They might discuss the strengths and weaknesses of their competitors, the key products and services they compete on, and the strategies they use to try to gain market share. They might also discuss the trends shaping their industry, like rapid technological advancements, shifting consumer preferences, or even regulatory changes. By understanding the competitive landscape, investors can get a clearer picture of the challenges and opportunities facing Apple and how they're positioning themselves to stay ahead of the game. Let's talk about market share, which is closely tied to competition. Apple's 10K might include information about their market share in specific product categories or geographic regions. Market share refers to the percentage of sales a company captures in a particular market. It's a key metric for assessing a company's competitive position and their potential for growth. They might discuss how their market share has been trending over time, the factors influencing it, and their strategies for gaining or maintaining market share. Understanding Apple's market share can help investors assess their competitive strength and their potential for future growth. Now let's turn our attention to a crucial aspect of any business: regulation. Apple's 10K includes a section that discusses the regulatory environment they operate in, highlighting the key laws, regulations, and government policies that impact their business. They might discuss things like antitrust laws, consumer protection laws, data privacy regulations, environmental regulations, and even tax laws. They might also discuss the regulatory agencies they interact with, like the Federal Trade Commission, FTC, the Department of Justice, DOJ, or even international regulatory bodies. Understanding the regulatory landscape is crucial for investors because changes in regulations can have a significant impact on a company's operations, their costs, and even their ability to do business in certain markets. Speaking of potential challenges, let's touch on legal proceedings. As we discussed earlier, Apple is involved in various legal proceedings and claims, and these proceedings can create uncertainties and potential risks for the company. The 10K might provide updates on significant legal proceedings, discussing the nature of the claims, the potential outcomes, and the potential financial impact. Investors should definitely pay attention to these disclosures, as adverse legal judgments or settlements can have a real impact on a company's financial performance and their stock price. So there you have it, a deep dive into Apple's world, straight from their financial filings.
These documents are treasure troves of information, offering a level of detail and transparency you won't find in a typical news article or earnings call summary. If you're serious about understanding Apple, whether you're an investor, a tech enthusiast, or just a curious mind, I highly encourage you to explore these original sources yourself. And of course, hit that subscribe button to make sure you don't miss out on future deep dives into the fascinating world of business and finance. Until next time, happy investing.